Great. So, good afternoon, and thank you for joining us, everyone. My name is Matthew Benedetto, and I'm pleased to welcome you to today's webinar hosted by Sun Summit Minerals. Today, we'll be hearing an update on the company's progress and plans for 2025. We'll also be covering the exploration season at the project in British Columbia's Toodoggone Mining District. Joining us is Niel Marotta, CEO of Sun Summit Minerals, who will walk us through the company's latest developments. This includes details on a $6 million exploration program, which features over 5,000 meters of drilling, along with geophysical and geochemical surveys to help drive new discoveries. The program is fully funded following Sun Summit Minerals' recent $10 million financing, and after the presentation, we'll open up the floor to Q&A. Please type any of your questions into the chat and we'll answer them in sequence. With that said, I'll hand it over to Niel Marotta, CEO of Sun Summit Minerals.
Okay, thanks, Matthew. Hi, everybody. Thanks for joining me today. We're going to walk through all the things that Matthew just described, and hopefully we'll have some time at the end for Q&A. Matthew talked all about who I am. I'm Niel Marotta, CEO of Sun Summit Minerals. He did bring up that we did just close a $10 million financing about 2 weeks ago. So we're in a really good position here. Capital markets have turned around. For those of you on the call that I've never met before, I've been in the gold space for a long time, mostly on the capital market side as a fund manager, doing corporate development and raising capital for companies. And I joined Sun Summit back in January, and I think this is, if not our first, and one of the first few webinars that we've done here. And so I'm excited to talk about the story and meet everybody. There's a few things that inform my decision to join Sun Summit, not the least of which is gold prices going higher. I think the equities have a long way to run, and we'll unpack that a little bit. But as it relates to Sun Summit, there's number one, a great team of people here, both on the board as advisors and on the technical side, which is very helpful. I'm not a geologist. My background's in capital markets, but I'm very pleased to be surrounded by folks that have very strong technical knowledge and great experience in the area. And we'll get into that shortly as well. Sorry, we're bouncing around a bit here. So, and then the next piece, sorry, I got distracted there. Pardon me, everybody. The next thing that was really important to me is jurisdiction. And Canada is largely regarded as a tier one jurisdiction, one of the most mining friendly countries in the world. And in particular, these projects, the JD project, which is our flagship, which I'll talk at length about today, is in the Toodoggone in north central BC, which is one of the hottest districts right now. And so all of those things are really important, and I'm very pleased to be with Sun Summit. I'm going to jump right into it now. I will make forward-looking statements today, and I'll have you read that at your leisure. So we have two projects. JD is our flagship up in the Toodoggone. We also have a project called Buck, which the company's had for several years. We put out a resource estimate on Buck back in the spring. So there's about 800,000 ounces of gold there. And so you can actually value Sun Summit on an EV per ounce basis. We're trading around $7 an ounce, which I think we can all agree is incredibly low. I would say broadly, the junior gold equities are trading below replacement cost. We'll talk about that some more, but big picture, with gold prices rising the way they have, the margins for the producers have never been bigger. And I mean, never. You know, some of these companies are making north of $2,000 an ounce profit. Gold price itself has barely been over $2,000, but for the last few years. So there's record profitability there. I don't think that's reflected in the stock price performance. It certainly has not trickled down to the juniors yet, who are largely trading below replacement cost. So this is a terrific environment to look at junior mining, particularly a company like Sun Summit that has projects in safe jurisdictions, tier one jurisdictions, and in the Toodoggone, which is a really, really hot place right now. I'm going to skip right over that slide and jump right through to the Toodoggone and why it's so exciting right now. This slide shows our JD project as well as our Theory project, which we optioned in the spring. That's 15,000 and an additional 10,000 hectares respectively. And what I want to point out on this slide is the amount of corporate activity that's taken place in the last 6 months. When you look at all the strategic investments, the capital that's been raised in the last 6 months, it totals more than $100 million. And the collective market cap of the companies on this slide here, excluding Centerra, is only about 500 million. So that's a huge amount of capital that's come into the area in a very short period of time. And the ones that I would highlight, most of you are familiar with Amark's joint venture with Freeport and the great results they had at their Aurora property in January. Since then, we've seen Skeena invest in TDG in a strategic private placement. We've also seen Freeport do an additional deal with Finlay, one of our neighbors. And then perhaps most interesting, we've seen Centerra make a $24 million private placement for 9.9% interest in Thesis, which is our neighbor directly to the west. So that's a huge amount of capital. That's going to drive a lot of news flow from the Toodoggone. And then, of course, we've closed our own $10 million private placement, which should drive the exploration and the news flow for Sun Summit. Our market cap today is just under 20 million. And I would point directly to the west at Thesis, a company that's certainly more advanced than us. They have a resource estimate of between 4 to 5 million ounces of gold equivalent and a PEA that is very robust. I think with all-in sustaining costs somewhere around $1,000 an ounce, which is very good. And their market cap is 250 million plus. So the basic runway of where we're on, we're going to continue to drill this property and explore. And as we build out what we think is a multi-million ounce resource, that's the kind of upside that's in front of us. And I think that speaks to why the public placement we did was so interesting and well subscribed to. I'm going to back up and talk a little bit about where is the Toodoggone, because I certainly didn't know it very well before joining Sun Summit. But really, we call this the Golden Horseshoe. This is on the other side of the basin from the Golden Triangle. It's the same rocks, but simply has been underexplored. It's a little bit more expensive than average to drill in this area, and I think it's quite remote as well. But in the gold price environment that we're in, the grades that we're seeing are very good, and I think that explains why you've seen a lot of interest in the area. So it's a very, very prospective area. We've gone through this slide already. So we're in the early stages of the Lassonde curve here, and Pierre Lassonde is such a legend in this industry. It's hard to resist including this in the presentation. But there's two real ways to make money in the mining business. One is through discovery. That's what we do. The other is through operations. The big mistakes that I've seen along the way are companies that insist on doing all of the above. That's not likely what we're going to do. Somebody's going to drop $1 billion in the Toodoggone to build a mine. That's highly unlikely that will be us. But we can create a ton of value through discovery and by adding ounces with drilling. And so that's exactly what we're going to do. We put out a press release yesterday. We intend to drill 5,000 meters at JD this summer. And the results will come out between September and December. So this is a perfect time to look at the company. I think there's a lot of news flow ahead of us and hopefully good news like we saw last year. We have a 5-year permit in place. This is zooming in a little further right to the JD property. So this is a 15,000 hectare property. We did get a 5-year permit granted to us in April based on our notice of work. That also allows us to do 2 additional things. One, rebuild the JD camp that has largely been rebuilt already. Camp was mobilized about a week and a half ago. So that's up and running. There's it's a 20-person camp. I think there's 17 people there today. We've also started doing some IP. I think the first IP line was finished today. So we're already making some good progress. We're already building drill pads. We've got more lumber arriving later this month, and we'll continue to build those out. But we're very excited to begin drilling, and that should kick off no later than mid-July. There's a chance it'll be earlier, but at this point, we're expecting to begin that drilling in mid-July. We're going to focus on what we call the Creek to Fin corridor. You'll probably hear me say that a few times in this presentation. But when you look at the top part of this area, this 4-kilometer corridor, that's where we did drilling last year. Important to note that last summer, 2024, was our first drill season at JD. We did 2,500 meters between the Creek and Fin zone. So this year, with the recent financing behind us, we're going to do twice as much work, 5,000 meters. And again, that will focus on this Creek to Fin corridor where we've had great results. And really the goal here is to do step out drilling. We want to increase the depth and length of the strike zones, both at Creek and at Fin. This is zooming in a little bit more now right onto that corridor. So we're looking at, again, on the west side Creek and on the east side Fin. And what I find interesting about this slide is that the quality of the rock and soil samples that we've seen and the fantastic grades. We see a lot of multi-ounce grades here, both in gold and in silver, important to note. So this is absolutely a mineral-rich area. This corridor has no shortage of drill targets. And so in addition to the work we do at Creek and Finn, we're looking at other potential targets, and we'll use a phased approach to inform those decisions on how we go forward. So this is the Creek Zone. Now we're looking directly on the west side of that 4-kilometer corridor. And important to note, and this has certainly caught my attention when I was first introduced to the company, is the result that we got from hole number 4 that was released last October, and that was 122 meters of 2.1 grams from surface. That is a fantastic drill hole. That would have been a great drill hole $1,000 ago on the gold price. So we're certainly going to follow up in this area and try and see how much we can expand, not just the 700-meter strike length, but also the depth, and try and understand how these steep shear zones repeat. And so again, that drilling will begin mid-July with those results coming out in the fall, September to December timeframe. There's also this chargeability high at depth. And as most of you know, this area is known for epithermal gold silver deposits that really are through, let's call the mountain ridges, with the porphyry targets in the valleys. And so the whole area is really defined by this copper gold porphyry at depth. And by area, I mean the district. And then on closer to surface, you've got the epithermal gold silver deposits. That is what we're chasing. We're not specifically chasing after the copper gold porphyry, but I can say from the quality of the conversations we have with other folks in the industry, it certainly is of interest, and it is of interest to us. Our focus this year, though, will be on the gold. Moving all the way to the east side of this 4-kilometer corridor is the Finn Zone. There's been quite a bit of historic drilling here, well over 200 holes drilled historically. The good news is that we do have that data. We've digitized it. We put that into block models as well as the Creek Zone. So that's helped increase our confidence that we're on track over time for a multi-million ounce deposit. It's probably worth pausing for a second just to say our goal is not to put out a resource in the very near term. I don't think that's what we want to do. Our goal is to grow the footprint of these strike zones. Hopefully, when we do come out with a resource in time, it'll show significant scale because that's what we want to show. We really want to show a multi-million ounce deposit here. We think that'll be beneficial to all the shareholders and to the stock price. Also, we'll get the attention of major companies that are in the area and looking at the Toodoggone probably as a district play. But back to the Finn Zone here. Again, you can see very good mineralization at surface and really terrific grades. And so this is exactly what the larger companies in the industry are looking for. They're looking for scale deposits, they're looking for excellent grade, and they're looking for safe jurisdictions, and we offer all of those things. So our focus at the Finn Zone, again, will be to step out and to try and grow the strength and depth of the deposit. So that basically sums up JD. I do want to talk a little bit about the nature of the option agreement that we have here. We spent $2.5 million last summer on the project. We need to invest another $20 million in work over the next 5 years to earn into 100% of this project. The good news is that what we'll spend this summer will cover the work requirements, not just for 2025, but also for 2026. So that'll put us ahead of the curve. And the remaining work requirements start to get a lot smaller, certainly a lot smaller relative to our market cap, and much more manageable, particularly when you look at the financing we just did and the warrants and our cap structure. And I'll talk about that a little later, but we think there's multiple ways to finance the completion of this work program to earn into 100% on JD, and we're very confident we'll get there. I certainly hope we'll get there well ahead of this schedule. This is a work requirement schedule. This is not a schedule on how we want to do things. We certainly would like to progress this project much quicker. I'm going to back up here and talk about Buck for a minute. Buck is our second project. It's not a project we'll invest a lot of capital in this year, but it's more central BC near Houston. We own 100% of Buck. It's a bigger land package with 52,000 hectares. The resource that we put out in the spring was on the Buck main zone, which you can see in the bottom left corner of the resource estimate, over 800,000 ounces of gold equivalent. I don't think we get a lot of credit for this. I think the grade at half a gram is probably on the low side of things. I would point out, about 100 kilometers southeast is the Blackwater project, mining at about 0.7 grams. So maybe we're not quite at the point where half a gram is the new gram per ton, but with gold prices behaving the way they are, I think there's a lot of opportunity for this project to at least add optionality for shareholders as gold prices go higher. And perhaps in another scenario, it's something that we would look to monetize and partner on separately. But we think this is a great project. It's still open at depth and on strike. Where there's good year-round access here. There's been a lot of historic mining in the area and great projects nearby. So we think this project, certainly the value for this project is not reflected on our stock price. And as I pointed out initially, if you look at our enterprise value today, which is under 10 million Canadian, and you look at the 800,000 ounces we have here, even just forget gold equivalent, just gold is just close to 800,000 ounces of gold. We're trading well under $10 per ounce, which is a fraction of replacement cost. And that's something that really I think all investors should be paying attention to. I know it's been frustrating for investors that we've seen the senior names go a lot higher and the junior names not participate, let's say, as a group to the same extent. I think that's a temporary phenomenon. And actually, I think it's worth backing up and speaking to this now directly. When you look at what's happened with gold prices, and I'm referring to the chart in the bottom right corner here, the gold stocks have underperformed gold price over the last 20 years, but the margins have never been better than they are right now. And so when you've got senior producers that are more profitable than they've ever been, and at the same time, you've got juniors trading below replacement cost, there's a very, very good and interesting setup here for a wave of consolidation. I don't know if it will kick off in a month or a year or 2 years. I don't expect it'll take that long. But the seniors, as we all know, must replace their reserves and must replace their resource base. And one way that's certainly a smart way to do it would be through acquisition, given that you can buy ounces cheaper than you can find them. And so we think this is a terrific setup and a great time to look at companies like Sun Summit. And our valuation, I think, again, at less than $10 EV per ounce is extremely low, given the quality of the projects that we have and the jurisdiction that we're in. Pardon me, I'm going to just jump all the way back down here again and talk a bit about the team. So for those of you that are not familiar with Sun Summit, our executive chairman, Brian Locke, has been in mining for several decades, deeply experienced and has built mines. Our senior advisor, Bob Willis, was previously the CEO of the company and has been deeply involved for a long time. I'm very fortunate to have access to speak to Bob at any time. He's a terrific resource, as is Brian. And then on the technical side, Ken McDonald is our VP of Exploration and formerly working inside the ministry and obviously did a great job at getting us a 5-year permit that not only allows us to do the work we want to do, rebuild the JD camp, but also look at the engineering. And we now have the right to build an access road, temporary access road in the area, which could potentially extend our drill season and lower our drill costs, which is important in the area. So this is something that we're looking at and considering, and Ken's been a huge part of that, deeply experienced guy. And then last, certainly not least, Chris Leslie, who I've sort of called myself Mr. Toodoggone. It was a pit geo with Kamesh back in 2004. Was actually part of a private company that had the JD claims 10 to 15 years ago. And so I kind of kid him a little bit that I like a geologist with some unfinished business. And I think that's the right way to look at it. When these claims came up for grabs back in 2023, I think the management team did a great job of securing them. Last year was our first season, and we're excited about the work that's ahead of us. And Ken and Chris are a very strong technical team to get us all the way home here. Onto our cap structure here. So we just did a very large financing relative to our market cap. Shares out 213 million. We do have a lot of warrants outstanding. Again, that's a function of the recapitalizing of the company that we completed at the end of May. And what I would point out here is that almost all of these warrants expire inside a 2-year time frame. The vast majority, over 90% of them, expire inside 2 years. And almost all of them are at 15 cents or lower, with the vast majority at 11 cents, 110 million warrants at 11 cents on our last financing. So doing the math very quickly, that can bring in upwards of $15 million of capital that would be enough after the drill season that we have planned for this summer, basically to fund all of the remaining obligations at JD, and that's a very important factor for the company. So hopefully the stock price will perform nicely on the results that we put out this fall, and maybe some of that warrant money will start coming in. I want to talk about gold for a little minute now that we've kind of gone through Sun Summit, because I think in particular yesterday we saw Citigroup come out with a bearish call on gold that I couldn't disagree with more. In fact, I think one of their reasons for being bearish on gold was that interest rates might go down. I turned bullish on gold on 9/11, well over 20 years ago, and haven't really taken a day off. Gold's had a terrific run since then, and that's largely been driven by negative real interest rates. When rates go down and inflation either it goes up or stays flat, real rates go lower. And when real rates go lower, that is very bullish for gold. And so our real rates are now just only slightly positive. And if in fact we do start seeing rate cuts, I don't see that as being bad for gold at all. In fact, I think it's completely the opposite. We're pretty close to the inflation adjusted all-time highs for gold, but I don't know that that's particularly relevant when you compare gold to other metrics like global GDP or global debt, or particularly the U.S. Financial fiscal situation, which is ugly to say the least. Central banks were sellers in the late 90s and early 2000s, and that changed about 15 years ago, and that trend is only intensified in the last few years. I don't see that slowing down. That's hugely bullish. And then we've also got gold rising against all currencies over the last 3 years running, which is also hugely bullish. In that a lot of folks look at gold as just a trade against the dollar. When gold's going up against all currencies, I think it's basically fiat versus real money. And I think I would also point to Bitcoin, where it's ostensibly the same investment thesis, right? Folks that want to get their money out of the system, they don't trust the media or the government anymore or the financial system, and so they're taking control of their own finances. And I think gold absolutely fits that narrative. I'd also point out anecdotally, there was an article about the amount of demand that's coming from retail buyers at Costco of all places, and that Costco has actually limited the amount of gold that investors can buy on a daily basis, which doesn't sound like weakening demand to me. So a very, very bullish backdrop for gold. And I think it's worth just talking about the U.S. fiscal condition for a minute, which is pretty ugly. Federal debt is approaching 40 trillion. When you look at the debt service in 2024, it was about $1 trillion. But when you look at where the yield curve is now, somewhere between 4.5% and 5%, and you look at where those debt numbers are going, it's not hard to see how that debt service number could double to closer to 2 trillion. That would represent about 40% of the U.S. tax base and would be by far their single largest budget item. That is terrible news for the dollar. It's very hard to see how this gets solved. It's certainly not going to get solved just by cutting some expenses. And with 84% of the tax base coming from personal and payroll taxes, it's also very hard to see how that tax base goes up without pro-growth policies, and that's tough to see. In fact, it feels like we're going the other direction with all these tariff talk and tariff wars that are happening right now. So, to me, this is the backdrop that's propelled gold higher for the last 20 years. This is the reason why real rates have to stay low or go negative or stay negative, and all of that is very, very bullish for gold. So, it's certainly talking my book. We're a gold company, but I think the backdrop for gold prices is very, very positive, and I don't see any of the fundamentals that have been behind the rise working against gold in the near term in any way. That basically covers what I wanted to talk about today. I'm just going to zip through really quickly here just to talk for a quick minute about the porphyry trend that's in the area as well. We have an area called McClare Creek that's quite interesting, and we've identified this 12-kilometer trend, this porphyry trend, where we're identifying targets. One of the things that we are going to do in the drill season this year as well, with those 20 kilometers of IP, line kilometers of IP, is cover the bottom, let's say, half of our property, which would include these porphyry targets here in the bottom half of our property. So stay tuned for more on that, but it could very well be that this is much more than just an epithermal gold silver story, and that we may have a very large copper gold porphyry at depth. Either one of those would be a company maker, and having both could potentially be really, really big. So I think with that, Matthew, I'll back it up and we'll take some questions.
Yeah, for sure. And great overview, Neil. So we have a question right out the gate here. Ron's asking if we have a permit, are we looking to get a road done or is it a temporary road? What type of road are we looking at here?
Yeah, good question. So we have to do the engineering work first before we making decisions about anything. Certainly, the road would be a temporary access road, so it would be single purpose use. And it's our view that certainly that's eligible for flow through. The goal would be to build the road and to be some bridge work as well between the JD camp and the Fin zone, and ultimately carrying on over to the Creek zone at some point. Um, so whether we build it or not, I think is still TBD. Certainly, we're inclined to do it because having road access does a couple of things. Number one, it could potentially lower our drill costs, and that moving the rigs around the property without the exclusive use of a helicopter would be cheaper inherently. There's also a potential to extend our drill season by a matter of weeks to months, which is not insignificant in an area of the country where our drill season is really limited to July through October. So we're going to study it, we're going to look at it, and we'll have more about that as the summer moves on.
Okay, and in terms of you spoke a little bit today about the Buck project and the Buck main zone. Do you think there's going to be any drilling on the Buck project this year?
I think the short answer is no. I mean, I think we took it to where we wanted to take it in the short term to a resource estimate. We think the potential for discovery is far greater at JD, and the grades are much better. I mean, we've been hitting long intercepts at 2 grams plus, and you may recall that the resource graded Buck is about half a gram. So Buck will kind of be on pause this year. Basically, we own 100%, so there's no work requirements there in the short term. Yeah, the short answer is we will not do really any significant work on Buck this year. Our focus is on JD.
Okay. And in terms of putting a resource out on either the Fin zone or the Creek zone at the JD project, is that something that you also think is going to be happening this year?
So again, short answer is no. Investors should not expect a resource estimate this year for JD. Um, I don't know that we have a timeline in mind that drives when we want to put a resource estimate out. I mean, obviously, we'd like to get there as quickly as we can, but I think it's also important to show scale. Um, I don't really see a point in putting out a resource estimate that's say sub 1 million ounces or just over 1 million ounces, just as an example theoretically. What we want to show is that we have a multi-million ounce deposit here. When we look at the valuation of our neighboring companies, of the neighboring companies that have multi-million ounce deposits, their valuations are $200 to $300 million, and that's where we want to get to. And I think we need to show some scale and potential for more scale for that to happen. And so the drilling that we do this year will help progress the project. Will not be sort of focused on infill drilling to create a resource. It'll be more about discovery and informing future drill targets so we can continue to grow the deposit.
Okay, and another question here on flow through dollars. How much are in hand and what is the timing on spending all of the flow through dollars?
Yeah, good question. Our flow through is probably around 7 million. And the timing for that would be mostly this summer. I think we put out in our press release yesterday a budget of around 6 million. So yeah, the vast majority of that will get spent this summer. We want to be aggressive on this project, not just because of our work requirements, but because we want to create results for shareholders. We had a lot of support in the market with the recent financing that we completed, and so we are not building a lifestyle company here. We want to be aggressive at exploring this property so that we can put out great results for the benefit of shareholders and use those results to inform our decisions on where to go next to ultimately build out a multi-million ounce deposit.
All right, and in terms of bringing on a strategic partner or anyone in the region that you think would be interested, obviously we're seeing that A-Mark is got Freeport backing them, and you mentioned Finlay as well with Freeport, and now Centerra with their strategic investment in Thesis. What is that going to look like for Sun Summit Minerals? Do you think it'd be one of those two names that would want to transact in the region?
Well, that's a great question. I don't have a crystal ball. Uh, I can tell you that we certainly talk to all the companies in the area, I think pretty much all of them are following our progress with great interest. But it's very hard to handicap um, if we were to do some kind of partnership down the line, who that might be. But I can tell you that there are other large companies that are keen on the project that we have conversations with, that we're under NDA with. So I can't disclose who they are, that are not yet in the area. So I think the interest in the project is both from within the Toodoggone and outside. And beyond that, I would just say stay tuned.
Okay, and one more here. In terms of drilling and assay results, when do we plan on having assay results for this year's planned program?
Yeah, so I think the earliest we could expect to see anything would be mid to late September. And that might be a little bit aggressive. So if I had to give sort of hand over heart guidance, I would guide towards let's say October, November, December. Hopefully by October we've got results out, and potentially as early as September.
Okay. Okay, if anyone has any other questions, please put them in the chat now. And I think that is it for the webinar today. So just like to thank everyone for joining today. And Neil, and any closing remarks?
Yeah, look, I think if I did have any closing remarks, it would be to reiterate that we have really exciting projects here where we've had great results in the past. I don't think the company's been given any credit for the results that it created that predate my involvement on the JD project. We do have an 800,000 ounce resource on Buck, so you can value the company on a EV to ounce basis. We're trading way below replacement cost, at under $10 an ounce. And we are in a really hot district in the Toodoggone. Again, 100 million of capital has been poured in the last 6 months through private placements and strategic financings, including 10 million of our own. We're fully cashed up to do the 5,000 meter program that we want to do this summer. And we've got lots of large companies looking at the area with great interest because we have good grade, there's scale, and it's a very safe jurisdiction. So I would encourage investors to take a long, hard look, do their homework. And if there's anyone that wants to follow up with more technical questions, more than happy to arrange those follow-up calls and bring our talented technical team on the line.
Okay, great. Well, thank you for joining us today, Neil, and thank you for everyone joining us on the webinar side. And have a great night. Take care.